Good morning, everybody. It's Tuesday, September 24th, 5:25 a.m. Central Time. Grain markets mostly higher this morning. December corn futures up a quarter cent at 413 and 3/4. November soybeans up 4 3/4 at 1044. December Chicago wheat up 1 at 583 and a half. December Kansas City wheat up a half cent at 577 and 3/4. December spring wheat is down 3/4 of a cent at 618 and a quarter. Let's start off with the soybean rally.
Soybean futures rallied sharply on Monday. The most heavily traded November 24 contract gained 27 cents per bushel on large volume and posted its best close since early August. Corn and wheat futures also rallied. The rally can be attributed to fund buying and concerns regarding dryness in Brazil. Private groups estimate that fund traders were net buyers of 20,000 contracts of soybeans, 30,000 contracts of corn, and 5,000 contracts of SRW wheat. Hedge pressure has yet to be a major issue in the U.S. with regard to new crop bushels, despite ongoing harvest.
If the private groups are right, the funds have been covering a lot of shorts here and did so yesterday. 20,000 in soybeans, 30,000 in corn. Those are some pretty substantial amounts. So from a technical standpoint, you've clearly got some short covering going on here. From a fundamental standpoint, I think that Brazil is the lone issue that you can point to right now. I think production in the U.S. is largely a known factor. I know the crop's not in the bin, but I think USDA is probably close-ish. Do they come down a little bit? Maybe they do. Maybe in soybeans they do. Corn crop appears to be very good from what I'm told. Let's look at Brazil and just how big of a deal Brazil is, and then we'll get into some Brazil weather stuff. So Brazil is projected to be the world's top soybean producer, of course, 169 million metric tons. That would be 39% of global soybean production. So they're a very, very big deal there. They're an even bigger deal when it comes to exports. Brazil is projected to account for 58% of all global soybean exports this year. And when you combine Brazil plus the U.S., that's supposed to represent 86% of all global soybean exports. So what that means is that if there's a problem in Brazil, where's the business going? It's going to the U.S. because we have a record crop, supposedly, according to USDA, and we're going to have a lot of beans that we don't know what to do with. So I think that from a fundamental standpoint, if the trade is really concerned about Brazil, and it's very, very early, we're going to get that in a second, but if the trade is concerned about Brazil and there appears to be a little bit of concern, that's enough to spark some short covering and maybe send some fund traders to the sidelines and maybe even encourage some speculative buying. So that's what we're seeing here. Let's jump to this Brazil situation.
So hot and dry conditions continued to hinder soybean planting in Brazil. According to well-followed private group Ag Rural, as of last Thursday, Brazil's soybean planting reached 0.9% of the total expected area. During the same week last year, 1.9% of the projected soybean acres had been planted. Planting continues to be delayed because of hot and dry weather. However, some weather models are forecasting rains to return to Mato Grosso later this week. Ag Rural also reported that as of last Thursday, 26% of the projected acres for Brazil's first corn crop had been planted.
Okay, so again, it's very early. They've got 1% of the crop planted. Maybe if things were normal, they'd have 2% of the crop planted. So it's very, very early. That being said, the rains are in the process of returning, but the amounts are going to be much less than normal. Here's some excellent stuff from our friends at Crop Profit. On the left, you've got the Euro model, and on the right, you've got the GFS. And this is expected precipitation as a percentage of normal. And there's a lot of stuff that's going to be much drier than normal over the last 4 days. The Euro on the left is much wetter than the GFS on the right. The Euro would indicate that Brazilian soybean country weighted average by production is going to see 55% of its normal rainfall over the next 2 weeks, where the GFS says only 17% of its normal rainfall over the next 2 weeks. So while there is some rain coming back here, both in the Euro and GFS is a little bit stingier. The rains aren't what they should be this time of year relative to normal. So the longer term stuff still would appear to me as if the rains are coming back, but the trade is taking no prisoners here. And they're rolling with the idea that, hey, you know what? If these rains don't come back in the extended forecast, and extended forecasts are a gamble, maybe we've got a problem. And again, to go back to those earlier charts, I'll flip back to them. Brazil is just such a huge deal that it just doesn't take much out of Brazil to result in one of these sharp rallies.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Re-ownership for beginners. This was kind of like a 101 level video on re-ownership, meaning you're going to sell cash grain and re-own it on paper, right? I hate reownership. I don't like it. I don't ever advise it in any official capacity when it comes to my grain marketing recommendations. That being said, I think there's going to be a lot of it this year because you have a lot of obstacles to storage. You've got high interest rates. You've got high storage costs. People have short memories. They remember last year, and storage was a bad deal last year. Didn't work out. You had guys rolling basis contracts, and the market just declined all year. It was a pretty bad deal. So I ran through some examples. I did an example using futures, an example using options. I think probably maybe the best thing I put in here was some of the best practices and some of the stuff to avoid. I've been doing brokerage for long enough that I know I've seen what works and what doesn't work. And there's a lot of stuff that I see a lot of farmers doing that I just would never advise myself personally. So even if you're not a beginner, maybe there's some stuff in here that would be of interest to you. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. There's a new video every single business day. You'll get our morning email, which is a grain market newsletter every single day at 5 a.m. Central Time. Just a ton of information from us every day. Remember, the premium deal is the best way to support what we're doing here. Podcast doesn't pay us anything. YouTube pays us barely anything. So the premium deal is why we're here. So if you are a premium sub, we absolutely love you to death. If you are not, you should check it out. And if you're not going to check it out, thank a premium sub because they are the reason that we're able to do this every morning.
Donald Trump plans to impose tariffs on John Deere if elected president. At a forum in Pennsylvania yesterday, Trump said he would impose a 200% tariff on the machinery company if they moved production to Mexico. Earlier this year, Deere announced it would lay off hundreds of workers in Illinois and Iowa to cut costs and also because of reduced demand. The company has also purchased land in Mexico as it does plan to shift some of its production south of the border. Trump also announced that if elected president, he will force China to buy $50 billion in American agricultural products, an agreement negotiated during his presidency. Trump has stated in recent months that he intends to put a 60% or higher tariff on China and a 100% tariff on Chinese cars built down in Mexico.
So many irons in the fire when it comes to trade and tariffs. So again, to refresher, on Friday this week, the U.S. is going to hike. This is the Biden administration. They're going to hike tariffs on a whole bunch of stuff from China. EVs are going up to 100%. A whole bunch of other items are going from 30% up to 60%. A lot of stuff coming just this Friday, and we have yet to see a response there. First thing that popped into my head here was, Mexico is our largest corn buyer on the export market. What if there was some sort of retaliation and they decide, you know what, we're going to go elsewhere, which is tough to stomach. I mean, it's such a geographical deal that just makes sense for Mexico to import corn from the United States. But could you get in some sort of trade war with Mexico? I don't know. I know a lot of people have strong feelings about this John Deere situation, but just add it to the list of trade issues that we maybe need to be concerned about.
U.S. corn conditions were unchanged last week. The crop was rated 65% good to excellent nationally as of Sunday, steady with the prior week. The rating surpassed the trade expectation of 64% and was the best for the week since 2018. USDA estimates that 14% of the crop is harvested nationally versus 9% the prior week and 11% on average. U.S. soybean conditions were also unchanged week over week at 64%. The rating surpassed the trade expectation of 64% and was also the best for the week since 2018. USDA estimates that 13% of the crop is harvested nationally versus 6% the prior week and 8% on average.
Harvest is moving along as it should. It's going to be pretty quick in some areas. These corn and soybean ratings are very impressive. The lack of, I guess I'll call it, volatility in ratings is impressive to me, and I think it speaks to perhaps how good the crop is. I know a lot of people don't like crop ratings, and they don't like the way that they're used or the way that they're put together or compiled, and maybe they do start to mean less later in the season. But the fact that we're holding together so well with regard to ratings is pretty impressive. What about wheat?
U.S. winter wheat planting was 25% complete through Sunday compared to 14% the previous week and 24% on average. Analysts had projected planting to be 27% complete. States with 30% or more of the crop planted include Colorado, Montana, Nebraska, South Dakota, and Washington. U.S. spring wheat harvest is nearly complete at 96%.
Yeah, nothing to write home about there. Everything is moving along as it should.
U.S. corn shipments were strong last week. USDA reported that 43 million bushels of corn were inspected for export during the week ending September 19th. The print exceeded pre-report trade expectations and was up 94% from the previous week and up 55% compared to the same week last year. Soybean shipments were reported at 18 million bushels. The print was up 2.5% compared to the prior week, but down 4.5% versus the same week last year. Wheat shipments exceeded pre-report expectations at 26 million bushels. The print was up 21% from the previous week and up 46% versus the same week last year.
Wheat shipments were especially good, and corn shipments were especially good. We're going to start to focus on soybean shipments very closely here. We're approaching what should be our biggest shipping window for soybeans. October into early November is when we see the biggest weekly prints with regard to export inspections. And then you'll continue to see strength in November, December. And then by January, sometimes you'll see a spike in shipments in January, but that's when we start shipping more corn out of the United States. So to watch these inspections and shipments numbers out of the U.S. for soybeans over the next, call it, 10, 12 weeks, it's going to be pretty important to determining whether or not we're going to hit these USDA export forecasts.
USDA reported a flash sale of soybeans on Monday. U.S. exporters sold 6 million bushels of soybeans to unknown destinations for delivery during the current marketing year. Flash sales have been consistent in recent weeks. However, the volume of these soybean sales has been small in comparison to recent years.
So while we're seeing frequent flash sales, they have been smaller and the commitments are still light. I wonder if importers, China, whoever else, are they worried about Brazil? And if so, are we going to see an increase in the quantities in some of these sales in the near future? That wouldn't shock me. I guess we'll see if the importers are thinking the same way that the funds are thinking. I guess is kind of my question. Is that going to happen? What did cattle do yesterday?
Cattle futures were higher. Live cattle were up 50 cents to 107 higher. Feeders were up 27 cents to $1.17 higher. Box beef was mixed. Choice ended the day at 301.81. That was up 162. And select ended the day at 287.79. That was down 80 cents.
Outside markets moving a little bit. U.S. dollars about flat. Stocks are up. Bonds are off. Gold's up $6. Crude oil is up $1.80 in the December WTI at 71.41. Have a great day, guys. We'll talk to you on Wednesday.